Welcome to Bull and Bear Education, where my goal is to educate the beginning and intermediate level stock market trader. We want to help you make the complicated easy. Alright, so before we begin today's technical analysis video, let's review what we talked about yesterday because things happened in the market on this Monday. So first, we will talk about, and again, the daily chart, as always. We will talk about Bitcoin. Yesterday, I said that Bitcoin was looking into falling into a bearish position, and sure enough, it did have some bearish action. However, I said you did not want to consider going bearish until it broke that 18,700 level and closed beneath it on the daily chart. And this is why I do the daily chart, and this is why I preach holding off on your entries until you get the candle close. Because if you would have pounced when it broke, it would have went down, and yes, you could have made profit because it tested all the way down to 18.3, and then it snapped back up. And right now, it's at 19.5. So that's why we show patience. Patience is key in trading. Always exercise patience. All right, let's look at the next ticker. All right, so we are going to, I'm having some problems with my keyboard, but here we go. Let's talk about Ford. All right, Ford Motor Company. Now, in our most recent video, I mentioned how news would be upcoming. All right, that could impact Ford. And Ford actually released news that I was not expecting, but it was news nonetheless. And the news was they're still undergoing chip shortages that can eat into their production. So as a result, the stock price, which closed bullish, as I was saying, we were looking kind of at a bullish situation, and it did indeed close bullish, up 1.43% on the day. Post-market, not so much, dropping from 14.93 down to 14.25. So that's what happened with Ford, and that is due to their production issues. Remember, as I said, if we start to drop beneath these EMAs, then we are in bearish territory. And because we have dropped beneath the EMAs, I will go ahead and say that I think bearish is going to be the way to go with this particular asset. But we're still awaiting that news from RAM, which could hit next week. But right now, on a pure technical standpoint, this is definitely a bearish play. If this post-market price drop, which has brought the price well beneath these EMAs and well beneath this trading range of our descending channel, if that holds until tomorrow morning's open. All right, and the next ticker that we will talk about will be GOOG, Alphabet. All right, so Alphabet had a good day along with the market. It ended up closing green. It's lost some of its value in post-market, but right now you're still looking at overall a positive up from the previous close on Friday. It's holding strong now. We'll see how it goes, but overall you do have a strong downward channel, a strong downtrend. So we'll see if this is able to hold this 100 level and start reclaiming support. This line in the sand that I have here, that is where I am expecting it to be at in order for it to be bullish. All right, so it has closed, it has gained a little bit since close, which is great. That's bullish, but will it get above this 104.97 level, basically 105, and start to reclaim some of its 5-day moving average? That's where it's at right now, like baby steps. Let's try to get the 5-day moving average. Once we get there and close above that, there's bullish potential. But until then, either sit on the sidelines or wait to see how it does if it closes beneath $100. All right, so that is our review for the previous day's tickers. You had Bitcoin, which gave you the okie doke. You had Ford, which was going up and bullish as anticipated. However, you had the fundamental news that brought it back down into bearish territory. And you have Google, which is pretty much treading water, only closing up 22 cents or 0.021% for the day. Now let's get into today's technical analysis of SPY and of AAPL Apple. All right, so what we are focusing on is ticker symbol SPY. And when I opened up SPY, or as I call it in my head, SP, I realized I had a Fibonacci retracement tool on here. However, it's not for our current movement. So what we're going to do is we are going to add a brand new Fibonacci retracement tool on to our chart so that we can see exactly where the levels are that we need to focus on. So our most recent trend is going to pretty much start from about right here, and it made its way up to here. When we do that, that fits our levels perfectly. Now we will focus in on the actual price action before we talk about the oscillators at the bottom. So these indicators are called oscillators. We will talk about them later on. So focusing directly on the price action. Again, we had a green day today, or if I haven't said that, we had a green day today plus 0.78%. And that brought us near this retracement level that is actually showing as support or resistance. If you look here, price hit right there as support, touch there as support, touch there as support. Here it showed as resistance, resistance again, support, and then it gapped down way beneath it, support, support. So this Fibonacci level is not just it doesn't just coincidentally end up being a Fibonacci level, but it also ends up being a support level. And so therefore, when you're beneath support, support becomes resistance. So we must break this resistance level of about 389.50. All right. So ideally, you don't want to necessarily gap up above that, because if you gap up above it, the index is more than likely going to come back down and retest it and fill that gap. So you wouldn't mind opening beneath it and having a candle actually power through that, because look what happened the last time. When you had a candle power through it, you went on this massive climb. All right. And so when you had gap downs, you get retracements. See, you gap down beneath it, you retrace back up and tested that. You were going to fill that gap. All right. Here, you powered through it the hard way and you got rewarded by a massive bull run. Here, you gapped down beneath it, and so you're going to retest it to see what happens. Now, maybe you power through it and you go on another bull run. If you do not power through it though, you're probably going to reject down and retest at least 378. That would be my downside target if there was a rejection of this 389.50 or anywhere above around that. So what I'd be looking for is a close on the daily chart, not just above the 389.50, but to be safe, I see that 5 EMA. Let's close above that 5 EMA. It's currently running at 391.06. Let's get above that. If you can't get above that, I'm not going to say it's in bullish territory. Now, this is where we don't just rely off of one indicator or even two, because I'm using Fibonacci and support and resistance and my moving averages. No, I'm going to also bring in my oscillators. So bearish momentum is still dominating here at a 35 on directional movement index. Our TTM squeeze is still negative, and our MACD isn't just diverged, but it's actually negative as well, with a current value of about -481. So bears still have control here. That's why we want to be patient. Like we saw with Bitcoin, if you're not patient, it can come back to bite you. So patience is the best thing to exercise. Wait for confirmation. Once you have your confirmation, then you make your move. I'm thinking close above 391.06 on the daily. That's bull territory. If you're unable to get that, then watch and see for rejection. Keep in mind, and this was on my previous video about the weekly economic calendar, you can go back and listen to that. The federal fund rates will release on Wednesday, so expect low volume as you had today. Compare Monday's volume with Friday's volume, and really the volume from last week in total. You had low volume because people are anticipating that Fed funds rate release this Wednesday. So tread carefully and trade carefully. Hey, here is your friendly reminder to subscribe, like, comment, and share this video. All right, subscribe to the channel. It helps us. It encourages me to keep on bringing you this content. So subscribe, like, comment, share, follow on Stocktwits. The link is in the description. Thank you very much for the support. All right, so let's move on to our final ticker of the day. Today we're only doing 2 tickers, and today's second ticker will be AAPL, the mythical, mysterious Apple. All right, so Apple today had a great day, up 2.5%. That's very good for your standard and poor 500 stock. That's very good for that, especially if it's not Tesla, which moves that, basically every other day. All right, so what you have here is a relative trend that you kind of have broken, and you're back down there. So we're going to put a trend line there, just so that we can kind of see what we're dealing with. So the first thing that we did, like I said, is we identified relative trend lines, and this is the first time that I'm seeing this chart. When I do these videos, I'm giving you guys my live analysis, not my predetermined analysis. Everything I'm doing off the fly. So with experience, you'll be able to do an analysis in about 5 minutes, like how I do, and maybe even quicker, because I'm actually explaining some of these concepts as I do them. All right, so we're going to put that there, and then we're also going to put a horizontal line across, because I just want to see if there is any relevant support or not with this ticker. So we'll put that one there, and then we'll put another one here at its current price. So the bottom yellow line represents the open, the top yellow line represents the closing price. All right, this represents the current trend channel that the stock has been trading in. All right, so let's get down to the actual analysis here. What do we see based off of all of this information put together? All right, so overall, I cannot say that the open, I can say that the open was at somewhat of a relevant level, because you see, and we're going backwards to validate our claims and get historical price action. You see July price action, it touched here, multiple times, broke up, came around to where our current closing price is, fell back down, fell beneath our opening price, and then it retested it, broke above it, and finally had itself a bull run. So this is actually a relevant trading range for this stock. And if we're able to actually get above this to the next level, you're going to see some bullish action. So this is actually a very interesting chart. And like I said, you're getting my live reaction. I did not even realize this until just now. This is actually a very interesting chart to see how it's going to break. So what I'm going to look for now is some commonalities. All right, so some commonalities between then and now to see when did we have our most significant price action. And so I'm looking at moving averages to see if there were anything there, and I'm not seeing it. So not necessarily any commonalities. So what I would say is you want to probably get above this 200 EMA, because the 200 EMA is also simultaneously about where the 10 EMA is. So you'd be clearing a long-term support level, you'd be clearing a short-term support level, or excuse me, resistance level for both of those, and turning that resistance into support. And that would allow you to get some momentum to test this 100 and then ultimately these 50 and 20 EMAs and break above those. So that is going to be where I would say our bull entry point could be at. So the 200 EMA is currently at 155.48. Let's call it 155.50. You are at post-market trading less than $1 from that entry point, and at close you were exactly $1 from that point. So if you can get tomorrow's daily candle or a daily candle to close above that 200 EMA and that 10 EMA mark, then I would say that's a good point to try a bullish entry. All right, because you're above this particular level, and maybe you will retest this ceiling for your trading range. Keeping in mind that you do have this trading range here that could possibly limit how much bullish momentum you get. But for a in the money call, this is a $200 gain for in the money. So keep that in mind. The distance between this 200 EMA and the ceiling of this trading range is about $200, or even a little bit more than that, because $2 here for options would mean $200, because 100 times 2. All right, so that's the bull perspective. The bear perspective, obviously closing beneath this yellow line and closing outside of this bottom trading range, that would obviously signal bearish. So the yellow line is at 149.37. I'd say that's about right. Anything below 150, looking at to the lower 149s. Previously you had a test of 148.37, so let's make that the entry for the bearish position. A daily candle that closes at 148.37, or below that rather. Below 148.37 would probably be the bearish entry, and above 155.48 on the daily closing of the candle would be the bullish entry. That would be my opinion of this ticker AAPL Apple. We hope you enjoyed this educational video. If so, do not forget to subscribe here on YouTube and to follow us on Stocktwits. Have a great day and great trading.